Yo, what's going on? What's going on? What's going on? It's your boy Ty. Hey, back with another banger. So today, right, we are gonna go into retail traders versus institutional traders. So there's just been this big divide on YouTube specifically, right, between retail traders and people who think they're trading institutional trading methods. So actually, we're gonna debunk a few myths, and we're gonna get into right here on the left-hand side. This is where I'll be sharing my screen in a moment. We're gonna actually get into the differences between retail traders and institutional traders. So what you're gonna find out is that most of you are retail traders. You don't trade for an institution, you aren't trading for a bank, and you're probably not managing a lot of bread or a lot of people's money. So you probably do not fit in that category. Although we're going to give you some of the benefits of both. So if you are a retail trader and you do want to, continue your career and possibly grow, into that next level and go to institutional side, then I'll show you, how you can go ahead and get that option as well. Or you may just want to, wake up every day, trade off your phone and keep it moving stress free. All right, so let's get right into it. Let's slide right over to institutional traders versus the retail traders. All right, right here I have an infographic. Okay, so what an infographic is basically a picture, with some facts on it. We're gonna go to a few other websites as well, but we're gonna start here. So we're gonna start with the retail trading side. You see, he's sitting there smiling with his big smile, right? All right, so a retail trader is an individual investor who buys and sells securities for his personal account and not for another company or organization. So most of you, like I said, right? Most of you are retail traders. You're trading for yourself. Okay, so if you're trading for yourself, doing it personally for you, then that makes you a retail investor. If you're using like MetaTrader 4 or Robinhood, and I mean, we really could go down the line of different, apps, Webull, things like that, then definitely, that's what make you and qualify you to be a retail trader. You're probably using Thinkorswim or something on your own personal accord. Then that's going to make you a retail trader as well. Okay. All right. So institutional trader is a trader who buys and sells securities for accounts that they manage. Once again, an institutional trader is a trader who buys and sells securities for accounts that they manage for organizations like a bank, an insurance company, a retirement fund, a hedge fund, okay, or a mutual fund. A lot of these guys, they have like Series 7s and all their, documentation to go ahead and properly manage that as well. They have access to different IPOs that they can invest in. IPOs are initial public offerings. So if you don't know what an IPO is, that's basically when a company is about to go public. Some people get a chance to actually invest in that, and then your institutional trader will have that opportunity to go ahead and open that paperwork and do what they need to do to invest in that. All right, so let's go back to our infographic, okay? All right, so now scrolling down. All right, so a retail trader usually gets their education, right, searching on the internet. They make a little money in their spare time, or they become a full-time trader and enjoy the flexibility. And you see, basically, they're just saying, hey, people are going right to YouTube and learning right off YouTube. This is an infographic, or getting their education, their trading education, searching the internet. It's a new time. You can learn how to bake a cake on YouTube. You can also learn how to do an oil change on YouTube. You can learn all sorts of things on YouTube. It's one of the world's biggest educational sources. It's like a big video library. Okay, so now moving to the institutional side, these traders will typically get an economics, math, or finance degree from college before getting a job at a finance institution. Okay, they often start their career as a junior analyst, and then they work their ways up to become a fund manager or senior fund manager over the years. Okay, so the information, I'm reading it right from this infographic. This is, on the institutional side. So just so you know the difference. All right, so retail traders focus on technical systems, price patterns, and indicators. They're just reading the market and reacting. Simple read and react, keeping things simple, right? Institutional traders focus on fundamentals, right? They're using news, they're using information, sentiment. They're trying to figure out how the market feels, how the marketplace feels, right? And then trading psychology. Obviously, if you're not confident in what you do, it's going to be hard to do it. So they got their psychology down packed. They've mastered their psychology. That's how they're able to manage these guys' funds, or these groups' funds, these institution funds. Okay, so retail traders buy and sell stocks in round lots, where a round lot refers to like 100 shares. Institutional traders engage in block trades, which is an order to buy or sell 10,000 or more shares at a time. Okay, so the number of traded, we're back on the retail side, right? The number of traded shares, okay, of retail traders is too few to impact the price of a security. And I feel like that's good information on this infographic, but also I've watched retail traders completely change the game this year with the whole GameStop thing, okay, over there on Reddit. So I mean, you could say what you want to say, but I've watched them actually have a voice, right? And I'm saying them, but we're all considering that as well, right? But I've watched, retail traders have a voice and actually fight back. And shit, well, what people say does matter, You get wealthy, well, people say doesn't matter, and I mean, to a certain extent, but shit, they've showed you that what people say, they were able to do what they need to do and make those moves, right? So now going over here to the institutional side, because institutions are the largest force behind supply and demand in the securities markets, they perform the majority of trades on major exchanges and greatly influence the prices of securities because they have a lot more money, so they can move, different departments of the market as they need to move it. Okay, if you have ever watched, brokers talk to each other as they're at the securities floor doing what they need to do, you'd be like, damn, they're on the phone doing that. They hop on a phone call, we need to move this amount of, like, it's really dope. There's all type of information online if you want to look more into it. Okay, so now just scrolling down a little bit. So retail traders invest in stocks and bonds or futures. Institutional does the same thing. Retail traders have minimal access to IPOs, but institutional traders have, they have access to IPOs and solidify, and they have that buying access to where they could do what they need to do. Okay, so often charge a flat fee for each trade and required to pay retail marketing and distribution costs. So I mean, that's why you see the fees, when you're trading and stuff like that, for the retail trading platforms. So as an institutional trader, you're not charged at all. Not charged the marketing or distribution expense. Okay, you're not charged the marketing and distribution expense. And then, right, so this is where they got all their information from. So when you do research and stuff, it's best to cite all your stuff. So I actually have some of these articles pulled up to where we're gonna go look at the one on Investopedia. I don't know if you guys use Investopedia. I think it's a great resource of a lot of really dope glossary terms and stuff. You really want to look at finance and just get your feet wet. Investopedia would be a great start. A lot of investors use it, right? All right, so we're going to slide over there right now, but let me know in the chat, are you a retail trader or are you an institutional trader? So institutional meaning, do you trade for banks? Do you manage funds for, a large group of people, et cetera, et cetera? Or are you a retail trader? Are you just trading for yourself and just, enjoying the fruits and veggies of your own labor? All right. Once again, like I said, we're about to slide over to Investopedia real quick, and we're just going to get, we're going to get a more in-depth a look at the definition between retail traders and institutional traders, right? So this was by Barclay Palmer. This is back in 2015. I'm on Investopedia right now. You can see the little Investopedia thing at the top. I know my face is in the way, but that's the website that I'm on. So institutional versus retail traders. All right, all type of investors are not the same, and there are a number of differences between those who are considered institutional investors and those who are seen as non-institutional or retail investors. All right, understanding the difference is worthwhile. If you're considering an investment in a particular stock or mutual fund that you have seen publicized in the financial press, there's a good chance that you do not qualify as an institutional investor. Okay, in fact, you're probably even wondering what an institutional investor is. You're probably not if you're wondering what it is, you're probably not an institutional investor. All right, so I know people say, oh, well, I'm trading like institutions. Well, you're trading like someone who's trading like everybody else. The only thing that makes them different is that they're trading for a lot more people than you are. So now they're an institutional investor. If you look up what institutional investors use, most of them are using like a 50 and a 200 EMA, or they're not using anything at all on their charts. They're just reading and continuing going. It's reading a balance sheet. Can you read a balance sheet? Yes or no? That's what Forex is. That's what reading is. That's what charting is. That's what finance is. Can you read a balance sheet? Yes or no? Okay, can you tell me, how is this company on track to perform well? Yes or no? And from looking at a graph, can you understand that? Yes or no? And that's what the type of decisions that you're making, right? So an institutional investor is a person or organization that trades securities in large enough quantities that it qualifies for preferential treatment and lower fees. So are you even doing that rate right now, right? A retail investor, okay, or non-professional investor who buys and sells securities through brokerage firms or savings accounts. So most people are buying through Webull and Robinhood and Coinbase and everything else. You're retail investors. That's just what it is, right? Even the people who are making like crazy money off GameStop and shit was, buying off Robinhood. They crashed Robinhood. Okay? So, look, institutional investors do not use their own money, but rather invest other people's money on their behalf. Retail investors are investing for themselves, offering in a brokerage or retirement accounts. Institutional investors are the guys on the big blocks, the elephants. They're in the pension funds, mutual funds, money managers, insurance companies, right? Investment banks, commercial trusts, endowment funds, hedge funds, and also some private equity investors. Now, if you're not in any of those markets, then you're not an institutional investor. No matter how you want to read it, oh, now I'm reading in an institutional way. Well, I mean, I feel like that's dope that you feel that way, but we're all reading the same information, I promise you. So until you get to there and do what you need to do to become an institutional investor, well, you're not trading like the institutions. They don't trade any differently than you. Okay, they just got more money, just like that. All right, so we can go through this whole thing, but I'm gonna skip right over here to retail side, and then I'm gonna wrap this video up because I mean we don't have to be talking about this shit all day. It's simple. Go to Google, research. If you like the research, cite your sources, right? Investopedia is where I got the first one from. I think it was Stocks to Go or some shit like that was where I got the infographic from. Okay. But retail or non-institutional investors, we're going to read this right here. This is off Investopedia, an accredited website. Retail or non-institutional investors are by definitions any investors that are not institutional investors. So if you don't trade for an institution, it makes you retail. And until you're managing, others' funds in a large quantity or amount, or for institution or a bank or endowment, what do they say, endowment funds or hedge funds or all the other things, then you're not doing that. Okay. If you want that type of information, then you need to go study, and then you'll be able to get access to where you can have access to, getting on those IPOs early and everything else that you need, early on, because, as an institutional investor, you will be granted access to that type of stuff. If you want to, get to that level, shit, go see how to, take the proper requirements to do what you need to do. Probably get your Series 7s and shit. Yeah, really get into this thing and do it for real if that's what you want to do. If not, continue doing what you're doing from your phone and stuff, and however you trade computer, and have a great time. Okay? Once again, that is pretty much every person who buys and sells debt, equity, and other investments through a broker, bank, real estate agent, and so on. These people are not investing in someone else's behalf. They're managing their own money. Okay. Non-institutional investors are usually driven by personal goals, which is, planning for retirement, saving up for college or the children's education, or financing a large person because of their small purchasing power. Retail investors have to pay higher fees on their trades, as well as marketing, commission, other fees, and all sorts of fees like that. So let me know, where you fit on the scale of retail trader and institutional investor, or institutional trader, retail investor, or institutional investor, however you want to, say it, however you want to put those words together in a combination, right? But let me know where you feel on that scale. And I know, once again, and you probably learn information. You think you're smarter than everybody. Oh, I know everything now. Now, I think that's really cool, but let me tell you, there's some fucking African kid, right, out in South Africa, who's literally using nothing to chart squiggly lines and putting up crazy numbers on the board, without all the smarts and wits and glamour and all the bullshit, you know what I'm saying? So it's all about keeping things simple. There's this thing called KISS. Keep it simple, stupid. Once I learned that, I have a very complex mind. I'm a thinker. I'm a reader. You know what I mean? I read a lot of books. I read a lot of information. I'm taking in a lot of stuff, all throughout the day. So I have a really complex mind. And somebody like me was able to come to the foreign exchange and then break it down to its simplest focal matter. Shit is simple. Keep it simple, stupid. Now, it's your boy Ty, and I'm out this bitch. Peace.